And finally, I want to talk to all of you about the morning report, which is available on Tom's Option Tools. Now, most of you that use the software may know where this is, but some of you might not know that we have this as an app. And you can actually get to this we made this free for everybody. All right, we made the morning report free for everybody. So under Tom's Option Tools, you can go to something called the TG Suite. All right, yes, TG, Tom Gentile Suite, right there, TG Suite. It's in finance. It's in the finance section, and you can find it in both the Apple Store, the App Store, and the Google Play Store. We have it available for both iPhone devices and Android devices. When you open up the TG Suite for the first time, you're going to have a username and login area. And so you just simply put in your username and your password for Tom's Tools to access this. You only have to do it one time. After that, it stays embedded in the app. And then when you open the app, it immediately moves to all the different buttons that we have. Okay. So I want to mention this. And this is, we offered this too. If you don't want to go through, or you can't remember, or whatever for other reason, we do have a non-subscriber place to enter this, and that's below it, below the username. It'll say non-subscriber. Click here, and then you just put your email address in, and then you can get to the morning report. Nothing else will work though. But the morning report, we made it for free. Once you click on MR right here in the middle of the screen and my screen, then it'll open up to the morning report, which is 6 different lists that we scan and update every single day, right? And I look at this every single day. I think it's a valuable report. I told people, whether you get it for free or whether you're one of our subscribers, you're still getting the same thing. You're getting those 6 lists, and those lists are high volume. So we look at the highest volume stocks and options. We look at the highest open interest, the highest optionals with open interest. We look at unusual call volume each day. We look at unusual put volume each day. And then finally, we also look at cheap IV and expensive IV. And what I want to do for this, for those of you today, is I want to talk about cheap and expensive IV, and we're going to take a look at what's cheap and what's expensive today. So here we go. So again, the morning report is part of the TG Suite of apps. Most of these, and I put this here to remember this, most of these are all premiums, so that if you're a partner, you're getting all this. If you are taking advantage of a mastery class, or maybe you're taking advantage of our, I call it our MOD this year, Mastery on Demand. And Mastery on Demand is you can go through the mastery program on your time. You don't have to do it live once a week. We have that now set up for all of you to do it at your time. Whatever mastery program you sign up for, you will get the subsequent scan that goes with it. Not only here, this is actually a simple scan that you get as part of the group, and it's available on TG Suite for you as a member of that mastery program. But you also get it on the software too. But I'm just letting you know, if you don't know it, we have them available right here on the TG Suite. All right, morning report though, that's available for everybody. So let's talk about the options IV and what we do here. So we have cheap and expensive. And cheap and expensive, what we do is it's kind of like taking a temperature reading. Jay, I was yesterday in Blue Ridge Mountains, and it was cold. I mean, it was freezing. It was 32 degrees. I opened up the door and I'm like, wow, I got to layer up. This is crazy. It was mountain weather. And so, if we were looking at how hot or cold it was based on a 24-hour day, it was as cold it was going to be. We were already in the lowest end of the range. It was only going to get warmer that day. And so I want you to think of cheap IV as the same thing, only we take a year of data of options implied volatility, and we mark that implied volatility each and every day. The way we rank cheap and expensive is, cheap is what is the cheapest it's been over the entire year, and where is it today? And if it's at or close to that cheap area, it's going to be on that list. Okay. And then so with expensive is going to be completely the opposite. So if we're looking at cheap implied volatility over the year, it kind of sets up like this. This is what we had coming into today. OVV, these are our top 10. Now I'm going across here and I'm seeing, all right, I don't know what OVV is off the top of my head, but I know Exxon, I know Devon Energy, I know Oxy Petroleum, and I know there are 3 of these top 10 are in the oil and energy area. And my mind's already clicking, and it's saying to myself, wait a second. If we are in a bullish seasonality phase from now to July with oil and energy, well, gosh, I'm going to be double looking at Exxon, Devon, and Oxy, because those are 3 stocks that have cheap options relative to where they've been. How do I know this? Let's take a look at Exxon for a moment. In fact, if you look at OVV, the high for the year was 58.90. The low for the year is 29.89. Look at current. Current is low. It's sitting on the cheapest that it's been in the last year. RRC, same thing. VDE, same thing. The low and today are the same. VTLE, 39.23, 39.23. Look at Exxon. Its high was 38.23. Its low was 19.68, and it's at 21.27. So it's just off that low, but it still came in and clocked in as number 5 at the top 10. Carvana. Wait a minute. How did Carvana get low? We're going to look at these in just a moment. But that's on here. Devon, Oxy, TGTX, and EQNR round out the top those cheapest implied volatility stocks. The expensive stocks, they're going to look completely opposite. So expensive is going to be the same thing. We're going to rank those between the current IV, compare the range over here, but we're looking for stuff that's at the top of the range. So you click on expensive IV, and then bang, you get this list. And on this list, we see TSM here at the top. We see MDGL. Now look at TSM for a moment. 49.46, 23.27, 49.46. Again, I want you to pay careful attention to this. We don't rank expensive IV by what has the most expensive IV. We rank expensive IV by looking at each individual stock and seeing where is it compared. It's kind of like saying, if we were looking for the hottest day of the year, well, the hottest day of the year where, Tom? In Florida? That's going to be a lot more as the hottest day of the year in Miami, Florida than International Falls, North Dakota. International Falls, North Dakota, the hottest day of the year might be, 68. Doesn't sound that hot when you live in Florida, but that might be very balmy up in North Dakota. So we look at the same thing. We look at them as individual stocks, right? So TSM, that's Taiwan Semi. That's hot right now. All right, MDGL, that's very hot right now. 144.48 is the high and the current. SOXL, 116.38, 105.57. So not at its high, but just off. And you can see Micron's on this list. Hewlett Packard's on this list. VST is on this list. These top 10 are the most expensive, all right, of the list of optionals that we track. So why is expensive expensive? Why is cheap cheap? A lot of it has to do with where we are in terms of earnings, in terms of an event-driven report. So let's look at today's results. I just want to look at a few of them here with you so I can kind of walk you through how these look the way they do. So I'm going to pop on over to our tools. Let's start with cheap. It's on the right-hand side. And I want to come down to Exxon. And I want to look at Exxon for a moment. So if I click on XOM, this is immediately going to bring up a chart of Exxon. And so I can see the chart of ExxonMobil, and I can see what's happened. We're past earnings, number one. Number two, Exxon's gone from about $100 to $101 a share, and it's worked its way up now to 108.5. So as it's moved higher, outside of earnings, the implied volatility dropped, but it is slowly just continuing to be down here near the downside of IV. That tells me a couple things. As IV is lowering, it tells me that more and more people are buying into the stock as well. Plus, we are seasonally bullish on this. So the big thing to know is that we're behind, that earnings are now behind us. Carvana is going to be probably more of one to look at. So CVNA, you can see here, here's Carvana's earnings. Their earnings came out on the 22nd. They popped Look what happened to the implied volatility, though. The IV was around 145 prior to earnings. Right after earnings, the IV dropped down to almost 90. So you can see, a very, very big drop in this IV. It moved up a little bit, but it's really it's kind of hanging out now around 90. But if I noticed, 90's been pretty much the low if you look into the cycle. So I don't think it's going to get too much lower. I think IV on Carvana could probably just move higher regardless of where the stock price goes. So that's Carvana. But what you're going to see is in a lot of these cheap IVs, you're going to see the same thing. You're going to see that that these are, they've had earnings in the past, and now they're moving forward. And what they're doing is, especially if the stock's slightly moving higher, that's going to make these IVs continue to move lower. So just because something's cheap doesn't mean that it's time to buy. You got to take that implied volatility and mix it with a system or a strategy that you know. Right now, we've talked about cheap. Let's go to expensive for a few minutes. Taiwan Semi. Remember that the high IV was 49.46, the low IV was 23.27, and the current is 49.46. We know this is high. Anyone want to take a wild guess as to why this is high? I'll guess for you, and that is that we've got to be coming up upon an earnings announcement. Well, we've got earnings in 38 days. You know what else is happening with Taiwan Semi that everybody knows about? I mean, take a look at this move. We had this move. Here's Friday. This was over $155 a share on Friday. Here we are right now, 140. That's a 15-point swing inside of 2 days. 2 letters, AI. AI has been pushing tech stocks through the roof and have been pushing them to the floor. And so we're seeing this happening. We're seeing this rollover of a lot of AI stocks. And so that's a lot of what's going on with the Taiwan Semi. All right. If I come down and look at a couple more, let's take a look at same thing with SOX XL. That's going to be that's a move that's really AI based. But Micron, okay. So Micron has earnings coming out in 9 days. That's a lot of what's happening. And yeah, Micron has gone from 102 on Friday down to the low 90s today. That's a pretty big move, 2-day move based on what's going on with AI stocks and AI chips and and bleeding into tech. But look at this implied volatility. We're talking about something that was trading around 28, then moved all the way up into the low 50s. It's still in the high 40s right now. But as we get closer to earnings, this is going to stay on the high side until after we get through earnings, and then you'll see that drop, that post earnings drop that we saw last quarter, and subsequently every quarter before then. Let's take a look at one more, and that would be Occidental Petroleum. I think we were looking at Oxy as a looking at those mid-month moves to the upside. And so did I pick the wrong one? I did. I didn't want to look at Oxy. I want to look at Hewlett Packard. We know Oxy's on the low side. Back to the expensive options. HPE. All right. Hewlett Packard Enterprise. And you can see here the high was in the mid-30s. Then it dropped down into the mid-20s. Started getting out of the mid-20s sometime in January and has been kind of bumping and running up. We had earnings come out. We had that big drop after earnings, but this has all been just this, earnings were positive. You had that jump in earnings, but then AI has been kind of bleeding into Hewlett Packard as well. So we're seeing that big move. I mean, look what's happened since earnings. This stock's gone from $15 a share to 20. Now it's back down to around, looks like 18. I mean, it had a 25% jump. It had a 20% pullback. It's just a 15% pullback. It's just been all over the place, as has been a lot of tech stocks.